like to welcome everybody to the webinar. We're going to be talking about the state of the camp insurance industry, and we're very fortunate to have three experts joining us to discuss it, each with their own unique perspectives. I'll start with Robert. So I've had the pleasure of knowing Robert for, I think, well over a decade now. And he's the president of Hibbs-Hallmark Insurance Company. He's based out in Tyler, Texas. Really beautiful place. I had a chance to visit last year. You know, they do a variety of different types of insurance. He's well known in the camping circle, also in the zipline industry as well. He's created a couple of really interesting insurance programs for those audiences. Originally from Louisiana, living in Texas, as I said, and he speaks frequently at ACA events and at events in the territories in which he's best known in. And I had a chance to co-lead a session with him a couple years ago at the camp conference in Texas, and that was great. So Robert, thanks so much for joining us. Robert managed to get Rick to join us, and that's a treat. So Rick's actually from the other side here. He's on the camp side, which I think will be really interesting. And he's, of course, at Kanakuk out in Missouri. And it's a very large program for those that may not be familiar with the camp. And they're fortunate to have somebody like Rick, who is focused on safety and risk management. And so he'll be able to speak a little bit from the camp side and hopefully guide us a little bit through this conversation. And then, of course, we got Will. And I've known Will now for a few years as well. Will's based down in Hendersonville, North Carolina, beautiful part of the country. And he also specializes in camp insurance and also works with conference centers, et cetera. And his territory kind of lines up alongside where Robert's is a bit down in the southeastern US. And he also speaks at a lot of the ACA events. I think he's also done CCCA events as well, and very knowledgeable in terms of risk management, and he'll be able to offer us a lot of information on that subject as well. I guess let's jump into it a little bit right now. Maybe Robert, if I could, I'll ask you to talk a little bit about sort of the state of the industry. And in the promotional piece that I put out, I kind of alluded to the fact that this was already going to be a very challenging year on the insurance side. And I think, and of course, with COVID entering the picture, unforeseen, it's made it even a multiple of what we expected. What are your thoughts in terms of where the industry is going and what camp owners and directors can expect over the next year to 5 years?
Thanks for having me. This is a good forum, and I'm happy to share what I know. And it's one of those fluid situations that changes every so often. But I sit on the insurance roundtable for ACA, so does Will, and most of the insurance companies have representatives. And every year we meet at the ACA National, and we talk about trends that we're seeing, things that could potentially be adverse to the insurance industry. And there's also several camp directors that serve on that ACA committee. But over the years, the insurance companies have been complaining about or pointing out how much they're paying out in hail losses. Some years it's the weight of sleet and snow on buildings if we have a heavy winter. But every year, the last 5 years at least, they have been complaining about their results on property insurance. So it could be hailstorms, wind-related events, forest fires, weight of sleet and snow, but every year it's something that's just cleaning their clock on property insurance. So we knew from listening to those insurance representatives that rates are going to start going up on property. So we've been trying to prepare our customers that, you know, they're not making ends meet. They're taking in less premium than they're paying out in claims. So, and they have to buy reinsurance, and the cost of reinsurance is going up. So just be prepared. Property insurance premiums are going up. So we've seen property insurance premiums go up the last 5 years. The last couple of years at this roundtable, they've been letting us know how serious the sexual abuse claims have been. and everything from Dr. Nasher with the U.S. Gymnastics. I mean, I think that's over 200 million. So there's been an increase in sexual abuse claims. And a lot of the reason is a lot of the states have changed the statute of limitations, and they're allowing individuals to file claims that are 20, 30, 40 years old. And so that's a little disturbing because insurance companies, they've closed the books on those policy years a long time ago. So if they got to reopen the books, start paying claims, and then again, it's pretty difficult to defend something from 30 years ago because often the staff is not there. They don't have any records. Uh, so it's basically, a shakedown in some cases, and they're paying out quite a bit. Some of the other things they've been advising us about is something called social inflation. So actuarially, when they come up with a rate, for your general liability, it's based on what the cost of claims are. And so, not that this is the real number, but let's just say a broken leg would normally settle for $30,000. Now they're noticing it's more like $300,000. So whenever they came up with the rates, the data that they use, what they're seeing now, where the courts are awarding a lot more, that's called social inflation. So that's why you see insurance companies right now kind of like putting on the brakes, saying, "Hey, the trends uh, are really adversely affecting our experience," and to the point to where Markel, for example, decided they were going to exit the camp industry completely. So I got the phone call sometime in September, I guess it was, from somebody pretty high up, a good friend, hadn't talked to in 20 years. And I knew if she was calling me, it's got to be pretty important. But she was letting me know that it's a tough decision, but they're going to exit the camp business and they were going to start non-renewing folks in December. So I have there's another really good camp agent up in the Northeast, AM Skyer, Henry Skyer, ourselves, and they use Markel. And I said, well, um, what about AM Skyer? And he said, well, they negotiated a 180 day. So we're going to continue with those customers. I think she said through March. So they're not in any immediate danger. And so that was a little disturbing because Markel has been a staple at every conference forever, and they actually bought their way into this business when they bought the ruling agency back in the early 90s. So, but it wasn't, just to kind of backtrack, probably about May is when we started getting information from insurance companies that they were going to lower the sexual abuse limits. So going back to the claims activity that they were telling us about, so now they're trying to make changes to their policies to try to change the trend of losing money. So they've decided to change the sexual abuse form. They started lowering the limits on sexual abuse. They were freely offering sometimes 25 million. Most of the carriers said, Markel said, we're only going to do 5. I think Philadelphia said, we're only going to do 5. So across the board, 5 million seemed like the limit everybody was going to do. Now they would all say, if it makes sense, we'll do 10. But we saw that, a lot of them were struggling. And so probably about a month ago, had a conversation with K&K, and sure enough, Nationwide has made a decision that they want K&K to find a replacement carrier in around 9 months. So, along the way, there's another big agent who's very good in New York, Sobel Affiliates. Little did we know they were negotiating with Church Mutual to move their book of business to Church Mutual. It had nothing to do with Nationwide exiting the market. Actually, it had everything to do with Nationwide wanting to reduce their sexual abuse limit, and they felt like they needed to offer higher limits, so they started looking way ahead of everybody else. So they've aligned with Church Mutual, which is a really good carrier as well. So in the past, K&K had the broader sexual abuse form. And so as agents, we tend, if all things being equal, we want the broader sexual abuse form. Now that they all have the same type of sexual abuse form, which is, we call it a predator form, and pricing is getting pretty similar. As agents, all we can really do at this point is shop each account and see who's got the best terms and conditions. And it gets down to little things like who's got the better wind and hail deductible, who's going to cover my trampoline. You know, one of the snags I'm seeing right now is some camps have a lot of activities, and as we're shopping around, they may not like that wet bubble that you put in, or that pyrotechnics program, or those sort of things. Hey, sorry.
They
Hey,
loved it.
oh, yeah, they love it. I don't know if the next carrier will.
Took a lot of work, but they loved it.
So it's been a really interesting market. The good thing is we still have availability. I think next year what we're going to see is we still have quite a few carriers in this space wanting to insure camps. I have total confidence that K&K is going to find a new carrier. They're owned by Aon. Aon is the largest insurance organization in the world, and the president of Aon is personally involved in this transition. And they had 15 carriers they were working with. I think they've narrowed it down to about 6. So they're pretty far along on finding a new carrier. So I'm not worried about them leaving everybody high and dry. But as an agent, I think we have a responsibility to kind of shop and see what else is out there. And that's what our plan is. And that's what, everyone, all the agents, the agents in the camp world, there's about 5 or 6, and they're all really good at what they do. And they're all going to take care of their customers. Morrow in North Carolina is a great agent. Chalmers up in the Northeast. So, and also Darryl Milgram on the West Coast. So all of us have been talking, and we have strategies to make sure our customers aren't left high and dry. But I do have to say, I do expect premiums to go up, easily 10% on the property. It could be 10% on the general liability, depending where you are. But I see premiums going up, and I see the wind and hail deductibles going up. Wind and hail deductibles used to be per occurrence. So if you had a $10,000 wind hail deductible per occurrence, if they beat up every roof, you had one deductible of 10 grand. Now they're changing it to per building. That is a big deal. So now if you have a hailstorm come through and you got a 2% deductible per building, it's 2% of the value of that building is your deductible. So if you got a building schedule with 50 buildings, that's a lot of deductibles to pay. So we're going to see little differences like that in terms and conditions, and they're not little differences. Some of them are big.
I'd like to tack on one thing to what Robert's saying here. I think that if there's one takeaway that I would like for all the people that are on this call to take away with them is that it's not a time to panic. The insurance industry is something that is very cyclical. We see ups and downs. We see coverage restrictions. We see years where insurance carriers will offer very significant limits with no issues. And it's, there are a lot of factors that impact that. But, and also within our industry, one size doesn't fit all. So there are going to be parts of the country that are more impacted than others, unfortunately. And the carriers, we were just talking about this before the group joined, but the carriers have the ability to kind of drill down and look at a finite picture of how certain accounts will perform in different parts of the country. So obviously California has been impacted greatly by forest fires, Colorado by fire, and also by hail. There's certain areas which you're probably likely to see greater impact on your pricing in those areas than you may in the Southeast, where we've been very fortunate to have a pretty profitable history, in the past 10 years. So, those pricing increases that Robert's talking about, yes, I will agree with him 100% that we are going to see pricing increases across the board, but certainly in other areas you'll see more. And maybe on average, we're looking at 10%. But again, I think the one thing that Robert made mention of were the handful of carriers, and this isn't a plug for Robert and for Hibbs-Hallmark or for Morrow Insurance Agency whatsoever. There are a lot of quality agents out there that Robert mentioned, but I think it would be a smart idea if you haven't so far, talk to an agency or a broker that does specialize within this industry, within this field. I think that even if you have a close local relationship with someone that doesn't specialize in camp or conference center business, it may behoove you to at least talk to a broker. And we're willing to do that, of course, at any time to give you some guidance as to what you should be looking for, what you should expect in your area, and the certain things that you can do to put your camp in a better light for the insurance carriers when it comes time for them to renew your account, to price your account. So again, don't panic, just be smart about it and talk with brokers that specialize in this business that can help you.
Hey, I see a couple of questions rolling in, and I tried to type an answer, but it won't let me. So it says you have to answer it live. So it says, we're currently using Markel. Should we be proactively contacting our agent to pursue alternatives or wait to hear from Markel? If you're dealing with an agent, the only correspondence you're going to get from Markel is a notice of non-renewal. So you do want to contact your agent, and I would start early this year. Like Will said, I don't think it's a panic situation, but you do need to be mindful that a lot of camps are going to be shopping. You want to wait for the last minute and get yours in a week before it renews. They need a good 30 to 60 days in order to prepare a proposal. So I do think if you're with Markel now, you should have the conversation with your agent, and discuss renewal and the timing, and let's start 30 days, 90 days out and those kind of things. One of the other questions was, so each building will have its own deductible? And yes, on hail and wind, they will have their own deductible, but you could still have a other perils deductible that would be on a blanket basis and capped, or per occurrence, I should say. But the wind hail looks like the common theme is per building. Oh, another question on there.
And again, that's going to vary. I mean, we're not exactly seeing that on accounts in the Southeast right now. So there are certain areas where you will have specific, if your camp has been impacted in the past 3 years or so with a significant hail event or wind event, then we may be looking at higher deductibles for wind and hail. But if not, there's a good chance that we will be able to proceed without those wind and hail deductibles.
I had a good question. Somebody just typed in. They said, "Hey, we just renewed with Markel. Should we be worried that we're going to get canceled midterm?" And the answer is no. I mean, if they renewed, they understand exiting a class of business. You don't just do it on a dime. It takes a good 12 to 18 months to really cycle through. So if you renewed with Markel, you're fine till next renewal. I would just start about 3 months before you renew next year and start looking around. The same with K&K. If you renewed with Nationwide, there's nothing to worry about. Nationwide's doing a great job. They're telling us business as usual. They're handling claims. So it's just at renewal next year, you just want to start early.
So let me ask a couple questions. One is, in terms of K&K, is there a set date right now that you expect them to part ways with Nationwide? And my next question is, tied into that, is in regards to Markel. Normally, if you're in a business space and one of the large providers leaves, you would expect that less competition probably means pricing is impacted, and not necessarily in a positive way for the buyers, in this case the camps. Is it fair to assume that might also lead to increased pricing?
I don't think the fact that someone's exiting the market is really what's going to drive increases. It's, in my opinion, it's purely the loss data that's driving the premiums, not because I think we still have healthy competition.
I would agree.
There's still, it's not like it was 30 years ago where you had one market and it was the ruling agency and Motors Insurance Company, and that was the only thing you had. I mean, there's still 5 or 6 really competitive markets. They may not all want your trampoline, for those that still have trampoline, but I mean, they're all still competitive markets competing against each other. So if anything, I think with Markel exiting, the Philadelphia's, Church Mutuals, Redwoods, all of the ones left, Brotherhoods, they want that business. So if anything, I think they're going to sharpen their pencil a little bit to try to get some of that business. But at the same time, they have to keep their pricing integrity. So that's the juggle that they have.
And Will, let me ask you, so in terms of Nationwide and K&K, is there a date, or this is just public information that they're out there and looking to make a change.
No, as Robert alluded to, Nationwide is being very good to work with from K&K's standpoint. In fact, they're going to stick with K&K until they are able to replace that market, replace that underwriting carrier. And from our discussions with K&K, they're really fairly close to identifying who the partner will be and creating that program. So not really concerned about there being a period of time where K&K is not going to be able to operate, not be able to service their clients. But we're looking probably at first quarter of next year as to when those changes will be made, announced.
Because they've been aligned for a long time, have they not? Like, it's, from what I understand from the insurance industry, is you see these turnovers every few years, but the K&K Nationwide partnership seems to have been one that's been out there for quite a long time. Is that a true statement?
Probably a good, 10 years, Will?
I was going to say, I think about 10 years ago, they moved away from Great American. So, I mean, it's not extremely long, but yes, they have had a good run with Nationwide.
And when it was Great American, it was probably 10 years with them, and then it was TIG Insurance Company. So I've been working with K&K for a good 30 years, and I know of 3 carriers in 30 years. So it's not terrible.
So as a side note as well, K&K's camp book, with the exception of a couple of different pockets of the country, has performed pretty well. I mean, has been very profitable for that insurance company. K&K, in addition to summer camps and conference centers, writes other types of activities like guides and outfitters, associations, sports associations, and youth associations such as that, and special events. Supposedly it's been the sports associations, the amateur sports associations, which has really put a drag on their performance from an abuse standpoint. And as you can imagine, there are probably far less checks and balances in place with those associations that they've insured in the past. They're nationwide than there are with traditional summer camps that do everything right from, by and large, do everything right from background checks to in-person interviews to orientation periods where they're discussing abuse prevention and things like that. So again, we feel pretty confident that K&K is going to come through with another market just based off their camp book alone that has been very profitable for them. And they do a good job at that. And I think the program that they end up with is going to be pretty solid.
So,
Hey, I got a couple of questions here that somebody typed in that's I thought would be of interest, unless, Evan, you want to pick
well,
one.
well, let me ask Rick a question, and then maybe we'll go back and go through some of those questions as they come in. Rick, if I may, in your situation, so what do you do each year in terms of analyzing the insurance and trying to negotiate the best insurance at the best price for your camp? Like, you have all of this information, and I know you work with, I believe, with Robert. So are you meeting? What would you recommend? What are you doing, and what would you recommend for camps that may not have the benefit of having somebody that's dedicated full time into this important role?
Yeah, it's a great question, and I think one we deal with. I do a fair amount of consulting and work with other camps around the country on their respective insurance as well as other risk and safety. So it is it's a market reset for us. I'm a broker as well, so when Robert and I get together and talk, we actually talk the same language, and so then we have to interpret for others that don't live in that space. But the reality of it is it's a market reset, and just like Will said, this is not DEFCON 5. Everybody on the room, from a camp perspective, guys, just take a breath. This is not COVID central when it comes to insurance, as it relates to everybody needs to scream and holler and wear masks when you're trying to buy insurance. So just to clarify things, this is not DEFCON 5 in the insurance industry. You should not get off of this call and take blood pressure medicine and try to reset. Just like Robert said, K&K has been through, program changes. And by the way, K&K is not an insurance company. They're a managing general underwriter. They're another broker, in other words. So I just want to make sure that as we throw terms around, I don't want my camp people to kind of think there's a Nationwide and a K&K. There's a Henry Skyer, AM Skyer, and an ACE or a now Markel. So so just understanding there are ways to enter markets through your own broker, which has hopefully access to a lot of markets. But we all have to understand, number one, that not every broker has access to all markets. So just because you have a really good broker that knows maybe a lot about camping or a lot about your industry or segment or your region, just understand any one broker does not have every contract with every camp market. So you may have to explore other brokers to be able to access and saturate every possible market that is out there. So just like, Will and Robert here are independent brokers. They represent 80 to 90% of the actual good, if you will, viable camp products out there. So if you want somebody that's truly independent that can access and shop the general marketplace, you would want to get a broker that does have an 80 to 90% access to that to be able to give you a fair look at it. In doing so, you also need to identify, does that independent broker, are they truly independent, or do they have markets, but they write everything more or less with one carrier? And I've run into that with some of my clients out there, camp clients, because other markets would not give them a quote because they knew that that broker would never place business with them. So it really did not do the camp justice because they knew the broker was not going to try to really market them well, fairly across the spectrum of all the carriers out there. Now, when I say we're not at DEFCON 5, in my own personal opinion, I've been doing this for 28 years. We're at DEFCON 2. It's a storm that is raging, unlike really, we've not seen it rage quite like this in the camping in several years. We've always had the property issues because camps are located in beautiful places where fire protection is poor. So we already knew it was against us in the property market. We've had good years, but more or less the wildfires, the hails, the hurricanes. It's always been a property battle to maintain good loss ratios in the property piece. All of a sudden, no, the property on a 5-year span has continued to run hot, over 100%. We've all seen it, not just in premium increases, but now you're seeing where coastal states, especially like California, they're just backing off, either leaving the state or they're hiking up deductibles and self-insured retention so high that camps are really struggling to get good low deductible insurance out there. The underwriting on property is getting more strict. The predictive modeling that Will talked about earlier is going to cause underwriting efforts to push camp people to really respond to what are you doing about wildfire, not just I have a questionnaire, but I'm going to underwrite you on it, and I'm going to impose maybe sanctions, or I'm going to impose some higher expectations before I give you the coverage. So that's going to be a little bit different on the underwriting piece of it, not to mention cyber underwriting, which is escalating, not to mention sexual abuse underwriting, which is not the token 3 to 5 questions anymore. To get the higher limits, it's going to require more and more on the camp's behalf to qualify for not just the base limit, but certainly to get the higher limit. And then the other thing, of course, is this whole pandemic thing, which it is a top priority. It's a top issue, but it's a very short conversation because of the way it occurred and it got out of sequence. And when I say that, what I mean is we all had COVID losses. We all lost revenue. We all had extra expense. I mean, we're all trying to survive in a space. But what happened was, instead of COVID showing up in my property or program, which triggers then the actual coverage if you bought it, the government got ahead of that sequence and they went ahead and shut things down without COVID actually being apparent on my property or affecting my program. So it was a very easy conversation when you called to file a claim. You say, number one, do I have the coverage? And then many found out you did not because of the way business interruption and pandemics and communicable disease coverage was kind of stripped away back in 2003 after SARS. And then it was kind of rebooted in as an endorsement. But most people are like, no, I'm never really going to use that. Then the swine flu H1N1 came on, and some of us, like me, went ahead and said, hey, Robert, I probably ought to reboot that coverage. But then again, it wasn't millions of dollars of coverage for communicable. It was a sub limit, very small, $500,000, $250,000. So we're all not sitting on this $1 million of communicable coverage. And by the way, even if you had $10 million, it fell out of the trigger point. The trigger point is civil authority has to close you down essentially, or cause you to close down, and COVID has to impact your property. Two things have to happen for coverage to come to your aid. Now, so there's all of these kind of indicators of rough things happening ahead. And the only thing really in my mind that's going for us right now that will cause us not to run out of runway is that we actually, insurance carriers have good investment income right now. If that goes away, we have DEFCON 4, in my opinion. That's where all of a sudden they're not getting any investment income. The losses are high, underwriting's tight. They're looking ahead going, what's changing in our environment to offset litigation for abuse? Really not much. Tort law is not changing a lot to champion the organizational side or less than the litigative side. And so therefore, they're not seeing any change there. Just like Robert said, they are stripping down limits. Sexual abuse limits are stripping down. The high limits are not available. The forms are changing. The predator form is more prominent now than the victim form. So we're seeing a much different reset, not just in the carriers staying in the camp space, but we're also seeing a reset as how they're looking at coverages, self-insured retentive areas like deductibles or whatever, and underwriting and the strictiveness of what underwriting is going to look like probably in I would say the first half of 2021 on all of our renewals. I'll stop right there because you asked a question, and so I just gave you kind of what I've sensed. You asked me how I go to market. Well, we have a guaranteed market outlook to say, well, who is still out there and what brokers do I need to give me a fair look? And that's critical. I gave you the kind of what I would say is you need at least 2 brokers to go saturate the market. And that's one good independent broker like Will and Robert, or someone like Robert talked about out on the East Coast or West Coast, whatever. But you need someone that's going to be that's going to be truly independent, fair to each of their independent markets with your best effort in mind. But you also are going to have to spin out to try to collect those either church mutual markets, brotherhood mutual markets, or other markets that your independent does not have access to really truly get a widespread look at how can you best then create more options. And lastly, I'm seeing organizations that have the horsepower and the wheelhouse to go to an alternate funding mechanism. And so they're looking more, joining captives, joining rental captives, joining other risk retention groups, trying to, number one, gain control of their program, because with fully guaranteed markets, there is more control. There may be sanctions on driver's ages. There may be sanctions on the use of blobs or pyro activities, which we're doing. So there may be more sanctions or more underwriting, but so you can free that up if you're willing to take more risk and go into a higher self-insured retentive type arrangement, like a captive, like a risk retention group or something. So
my sense, just from Robert's expression each time you mentioned pyro, is that he may not have been as excited about that addition to your program as you were. Is that a possibility?
No. Robert and I, we run the same. We don't mind tannerite. We don't mind loud. We just want to do it well.
All right.
And so it was heavily underwritten, and we all chuckled about it. And our underwriters and in the upper line were like, "Yeah, we feel pretty good about this." So it can be done. It just takes a lot of work.
I have no doubt. Let me ask you this. So you touched on this a little bit, Rick, and maybe I'll throw it back to Robert and Will here. In terms of COVID and in terms of the pandemic, my sense was that a lot of camps were surprised that they didn't have coverage, that they thought the pandemic coverage or the insurance that they had already purchased was going to protect them, business interruption, et cetera. Can you give a little bit of a description as to why COVID-19 was different than what might have occurred in the past, and why many of these camps unfortunately didn't have the coverage that they may have imagined they had?
Yeah, I'm happy to. So, COVID-19 is a virus. And under a standard general liability policy, it typically excludes any liability related to viruses. Now, some of the carriers would offer an endorsement called transmissible pathogens, and they would add the coverage back. And that was, a bell and whistle that a couple of carriers said, we're going to add this back because camps may need the coverage, and they're trying to one up their competitors. As soon as COVID hit, those carriers got a little nervous that we're offering the transmissible pathogens and started taking it away at renewal. So that would be the coverage that would defend the camp in the event a camper or a guest alleged they contracted COVID at camp and sued the camp. So, which was pretty unique to camping. Like as an insurance agency, we don't have that coverage in our package. You know, my fishing lure manufacturer, he doesn't have that. So most of the businesses do not have that coverage. It was kind of unique to maybe restaurants in the camping world. When you look at, so it's on the liability side, and that's why everyone gets really nervous about lawsuits. Everybody started redoing their waivers to add COVID. And, you know, I really think the solution is going to be the federal government stepping in, similar to what they did on terrorism. And so they're already talking about the Pandemic Risk Insurance Act, which would be a program basically to pay loss of income if due to a pandemic shutdown if you met certain conditions. It's too early to really talk about it. I'm just glad that the feds are talking about it right now. So we don't know what it's going to finally look like, but it'll probably look similar to terrorism, where when you get an insurance quote, terrorism is separated out. And if you want terrorism, you check the box, pay the extra premium. And really the federal government's kind of acting as a reinsurance company. But on the property side, everybody buys, not everybody, but most buy business interruption coverage, which pays for loss of income and or extra expenses related to a interruption in your business when you have a covered loss to covered property. So you have a fire at a building, lightning strikes a building, and you're shut down. It would pay that loss of income or the extra expenses to continue operations. But it's a direct physical loss: fire, lightning, hail, wind, you know, those kind of things. With the virus, you know, that's the challenge, is there's no physical damage to the property. So those farms are not responding. So some of the camp markets were offering business income for communicable disease, which does cover this sort of deal. But the triggers are that you have an outbreak at your camp, and that as a result of that outbreak, you're being shut down by some authority, whether it's the CDC or the local health person or the governor. But that was the sequence: is you had an outbreak at camp, and as a result of that, they shut you down. So to Rick's point earlier, no one met the trigger because the government shut us down before camp even started. So we don't even have campers there. We do have some claims right now that are being paid because some camps did open up. They did have some COVID cases, and then they worked with their local public health officer, and he wrote a letter saying, I recommend you shut down. So we did have, I mean, less than a handful of camps that did go through that and received some benefit. And of course, as agents, we're all watching this stuff. There's some Lloyd's policies out there that were offering business income for some restaurants, and Lloyd's policies are manuscript. So their language was not, it was probably a little broader. So a lot of the lawsuits occurring right now, that's where I think they're going to be able to prevail, is some of those Lloyd's property policies. But so far, I'm not seeing any of the courts. It seems like, you know, the property insurance forms that we're using here in the United States, the ISO forms, are working as they intended, because insurance companies never really contemplated this risk and built it into the rate.
I would say, add to that, Robert, and I would caution everybody out there, be careful of these somewhat regional carriers. I've analyzed some of their policies in comparison to some of the national camp carriers, and although they come in and they tout, you know, better pricing and whatnot, and usually they are, when you begin to do comparatives against their coverage forms and how they're going to respond to your losses, they're pretty anemic in how they're going to cover you. So again, it is nowhere near an apples to apples comparison. So as you search out there in this resetting of the markets, just be careful of some of these new organizations that are popping up, these new markets that are not offering the kind of comprehensiveness that you're seeing in some of the more mainline national carriers. Not that they're bad, just I would just really compare very, very, very closely.
Yeah, I do.
Some of those regional markets can still be used. They just need to be tweaked by someone who knows what to ask for to tailor it to a camp operation.
Yes.
And I just want to tack on to what Robert was saying, and he would probably agree with me that you know, this past spring was one of the most difficult years as an agent for the sole aspect of having to tell so many clients that we didn't have coverage that could help them out during a time of shutdown, during a time of loss. And it's kind of a helpless feeling. So that doesn't make you feel any better, but it was very difficult for us as well to have to deliver that message. The coverages that Robert was talking about that were built into those policies, the small amount of communicable disease, business interruption insurance, I mean, those were added back after Rick said, after 2004, after the SARS and H1N1 incident, the carriers knew that there was a need to build back in some coverage for camp operations, but it was never designed to pay out in the case of a pandemic. I mean, that was never the intent. The intent was to help a camp out if they were shut down because there was salmonella in the dining hall, or if there was a measles outbreak at camp. That was the intent, and which is also why there were specific wording within the policy that stated the loss had to occur at the premises. So this was, again, a tough message. This message is being challenged, though, by the thousands in courts across the country. And really, like Robert said, I don't see there to be too many cracks in the armor so far. There's one case in North Carolina that has not been settled, but the initial the case is being allowed to proceed against Cincinnati Insurance Company, not a camp writer. This is a restaurant in North Carolina that sued Cincinnati Insurance Company for loss of income, and the judge ruled in the restaurant's favor. So they are proceeding forward with that case. But there are many others behind it which have ruled in favor of the insurance carrier at this point. So unfortunately, I don't really see, without a pandemic backstop from the federal government coming through and funding this sort of loss going forward, I don't see where insurance carriers are going to be able to provide business interruption for a communicable disease type loss, for a pandemic related loss. The industry estimated in the first 4 months of the pandemic that the total business interruption loss nationwide had been about $400 billion per month. And the total U.S. surplus for the insurance industry is only $800 billion. So we would have been insolvent within 3 months. An insolvent industry, this means we wouldn't have an insurance industry for camps or for anyone for that matter. So, it's not an easy message to hear, to deliver, but we are really reliant upon the government to come through for us from that standpoint.
There's a number of questions here that have been asked. If you guys take a look down at the Q&A button at the bottom of your screen, you might see a couple. I'm not sure if you want to address or who would like to. One is from Rhonda McDavid. Let's see if we tackled that yet. It says, what types of camps or organizations or factors do you think would make finding an insurer willing to take on a camp moving from Markel or rejecting coverage? Are organizations who lease all properties, don't own, just for camp sessions in better shape?
I saw that when I was trying to figure out how to answer it, but I think this year what a camp can do, you want to sell yourself to the insurance company. You want to spend the time with your agent and say, here's a copy of my waiver, here's my brochure, here's my policies and procedures. You're trying to present yourself to the insurance company as a good risk. So, the camp client that can't spend the time to send me the policies and procedures on how they prevent wildfires, I got to leave that blank. When it gets to the insurance company, remember, there's going to be a lot of shopping going on. So the camp submission that's the most complete and has all of that information that they look for are the ones that's going to get probably preferred treatment, better pricing. One question was, I just rent camps. That's great. You have no property. So insurance companies, they're tired of paying for hail losses. So if you're just buying general liability and auto, that's probably a good thing because they're thinking we don't have to worry about a hail loss or a wildfire on this particular camp. So I think that might make you more attractive as opposed to the camp that has $5 million worth of property and only like 3,000 camper days. So where it's all a property risk, not really any general liability. But I think, working with your agent, a lot of times these applications ask you to attach, your resumes or a resume on your top people, maybe your waiver, your brochure, your contracts. Don't blow that stuff off. Attach it all and show the underwriter that you really care and this is important and you want to demonstrate what a good job you're doing on risk mitigation.
I think the key that Robert said is key because brokers tell the story and they can't tell a story that they don't know. If you're just filling out an accord form that's a piece of paper and you're just answering that and you're expecting a broker who doesn't know how to tell the story or doesn't have enough information with how to inform an underwriter of the risk they're about to take, you get lumped into a stack of 40 files on an underwriter's desk sitting in an office in downtown Wisconsin city somewhere. And so all of a sudden you're like, well, why are they not treating me a little differently? Look at all we're doing. And the reality of it is it's incumbent on the camps to really build their bid packet, just like Robert said, to give the broker, now a knowledgeable broker like Will and Robert will be asking for that. If you're using a broker that is not in the know when it comes to how to sell a camp to an underwriter, he's just giving the applications and just basically peddling in information rather than trying to really structure it so that it benefits you. And also when I don't know Will is as good as Robert, but when Robert goes to market and other guys like him and Will and Labradorf out on the East Coast or whatever, they're going with years and years of experience and a book of business that represents their expertise and their ability to know the industry, to know what's happening. And underwriters, they do respect and honor those organizations because they know the broker has already kind of qualified the risk through the eyes of the broker. So the underwriter is trusting that what is on paper is what they're going to be taking the risk on, because these guys would not misrepresent a risk and then find out later it wasn't what they said it was. On that, I think it's incumbent, and the key I put in here for key for 2021 is it's 3 letters. It's called ERM, and it means enterprise risk management. It's a big word that means a lot of things, but I think for us in the camping world, we have got to make sure that in our next chapter of evolving to what does it look to be insurable in this next chapter of camps, is you can't just go, my risk management has to do with waterfront rules and buying insurance. And so we can't just settle on a couple of safety rules and playbooks and then insurance, and then that constitutes how I'm looked at in the industry as a success or not. ERM does go further, wider, and deeper in the sense of analyzing your losses, analyzing your actions, analyzing the predictive modeling, and really taking measures to get in front of this stuff rather than being drugged down the path of it. When it comes to wildfire protection, get in front of it. When it comes to child abuse safety protocol, get in front of it, because otherwise we're going to be drugged down it, and getting drugged down the path is not going to land you on an underwriter's table with the file that they set apart saying this is the one we want to make sure we don't lose, because they are cherry picking clients out of a very bad, if you will, national loss history. They're cherry picking because they are for-profit entities, and they need to get the good risks. And those are going to be the ones of us in the camp industry that really lends ourselves to maturing our safety overall approach to everything we do.
Hey, Evan, I'm reading some of these questions here. If you like one of them was asking about captives and risk retention groups. Do you want me to speak to that for a second?
Yeah, sure. There's also the one above, which was a real quick question, Robert, which is, what is the best resource for finding independent brokers? So you mentioned that you're part of a roundtable. Do you have a list of brokers that you might be able to share that I could post later?
I'd say go to ACA's website or 3CA's website, because all of the brokers that are specialized in camping, we're all listed as business members. So I think that's the kind of the unbiased way to go about it is to go look at those organizations. 'cause you
I
can
would
find-
say
See,
in that,
I'll see if I have a moment here. I'll pull up that link and put it in. And go ahead, if you want to answer that next question about captives and risk
Rick.
retention groups.
Rick, you were going to comment about the broker thing, or?
Camps, I just want you to listen to me. If you have a donor or a friend of a board member or an old camper that's now in insurance, just be super, I mean, that's great. If they want to help camp, if they want to pour out, please, please, please listen to me. Use an expert, hire talent for your broker. Don't just, let them serve in the kitchen or let them do other things, because if they are not in the know in navigating your insurance landscape, it's something that their heart is in it, but their capabilities are not. So just please find someone who is very well equipped and knowledgeable in this space, because it is very niche. Like I said, I was a broker, have been for 28 years. I was surprised when I got into the camping niche 18 years ago to find out that the camping niche is more niche than most niches. So it's not something that everybody knows, and it's not something that everybody does well. So please pursue that, because I think it'll pay dividends.
So I see some questions about self-insurance, and also one of the other comments, apparently we're using a lot of insurance jargon, which I hope we don't lose anybody. I normally try to speak more plain English. I'll try to do that. So whenever you talk about self-insurance, the truest form of self-insurance is basically you're just paying your claims out of pocket. And that could be either a funded reserve or unfunded reserve. But what it really kind of looks like now, and there's a large camp that Rick and I were talking to a month ago that's a self-insured, but really what it is, it's a partially self-insured program. So they will go to a captive, and the captive will provide insurance. But so it's essentially like a high deductible plan where the camp might take the first 500,000 for each and every claim. And then, and if it's over 500,000, the captive is buying reinsurance to cover those losses over a certain amount. And so the thought is well, I'm paying 500,000 for my insurance for my camp, so I should just reinsure that or form a captive, and I can save all that money. Well, the truth is whenever you get into a reinsurance or a captive arrangement, normally you got to put up capitalization money, which could be 60% of your normal premium. And then you're still paying a premium because it's got to be funded somehow. And you want to kind of build up your reserves. But that captive is having to buy reinsurance too. So when the cost of reinsurance goes up, so does the cost of your premiums you're paying into your own captive. And Rick and I had the opportunity to kind of look at behind the curtain on a really large camp that isn't a captive. And he was telling us, hey man, our reinsurance costs went up considerably, and they had to now take on, I think it was $1 million, the first $1 million on every property claim. They couldn't get as high as sexual abuse limits as they wanted. They could only get, I think, 5. So, and the question posed to him in this other risk management camp meeting, was at what level does it make sense to consider captives? And most camps think if I'm paying $500,000 a year, I should consider it. And the truth is not how much you're paying in premium, is how much available reserves do you have? Because once you self-insure, if you have $1 million or $500,000 per occurrence deductible, suppose you have 3 kids get hurt in a year, that's $1.5 million. How much resources do you have? Suppose you give everybody E. coli because you didn't test the well, and now we got 300 campers suing you. Do you want the first 500,000 on every one of those? So while it might sound appealing, I still think guaranteed cost programs are the way to go. If you want to put some skin in the game, take a $10,000 deductible on your GL, or go with a $25,000 property deductible, and stick your toe in the water and see if it's satisfying what you need to do. But that's what a lot of my camps will do once they start thinking about captives and stuff. That's what I'll say is let's look at higher deductibles and what kind of savings we can get, and that way we know we have a guaranteed cost rather than this open-ended exposure of a captive. Rick,
you may see at camps in some certain areas. I mean, for instance, California, they may be more apt to explore the captive route, just due to the inability to get insurance or get reasonable terms and conditions. But, the rest of the country really is still seeing pretty competitive guaranteed cost insurance, and not having to put up that capital that Robert was talking about. So I really think that unless you're just a very large organization, captives probably aren't something I would, as an agent, would recommend my clients consider at this point.
Fair enough. A couple other questions here from Philip Moore. Just to clarify in terms of Markel, he's asking if Markel is only exiting the GL market, and they're actually exiting the camp market as a whole, if I understand correctly, right?
That's right. So it's all lines, not just general liability. So they're exiting the class of business. So if you're a summer camp, short-term camp, travel camp, conference center, they're getting off of it.
No, the only
I'll put
thing,
it in my language, they're exiting camps entirely.
yeah, the only thing I would say in that is if your broker has purchased a monoline or a single like D&O policy or something outside of the camp market through Markel, that may not be canceled. So don't take that as all inclusive, because if you bought a camp package through Skyer or through your broker that's in Markel, then that will likely all be seen as a non-renewal in that package. But if you've bought a single line item, your broker should be able to tell you whether that's going to stick or not.
Fair enough.
Yeah, good point.
There's a good question. Mindy Nash asked, that you mentioned a good broker has access to 80 to 90% of the underwriters and actually use more than one of them. If you're willing to share, how many underwriters do you, Robert and myself, how many do we use and what percentage of the time? It's very cyclical and it could change by year, but I would say that, I would say we have probably 50% of our business with a single market at this point. That's shifting as we speak. And I would say 30 and 20 probably is kind of, those are just very, that's not an exact number, but I would say that's probably fairly close. And then there are going to be some camps out there with specialties that require, specialty markets. So taking those out of the picture, of the main players, K&K, Markel, Philadelphia, Redwoods.
Got it. I was going to ask you to sort of name them without necessarily affiliating the percentages. So you just did that, which is great. Robert, did you have anything you want to add?
No, I use the same mix of carriers, what was Markel, but no longer. So Church Mutual, K&K, which is nationwide, Philadelphia, Redwoods Group, sometimes Great American, if it fits. If it's a special needs camp, there's a couple of other markets like care providers that might be interested. But we typically go to 4 or 5 markets, and one of the exercises we're doing now is shopping each of the camps. But what we're finding out is their appetites are not all the same. Some I'll use trampolines for example. I have some camps that have trampolines. So, there's some carriers that say, no way in the world are we going to insure trampolines. So I still want them to quote, and I want to go back to the camp and say, all right, here's insurance company A that will exclude your trampoline. Here's insurance company B that'll cover it. And if it's $10,000 difference in premium, that camp has at least a decision. We want trampolines, it's going to cost us 10 grand, or we can do away with trampoline this year. So, but I think that's a lot of what we're going to see is this carrier's willing to quote, but they don't like our jet ski program, or I won't say it again, Rick, the fire tech program.
But I will say that the underwriter's appetite changes when they're working with an organization and a camp that has a history of doing it right. Or doing it above water instead of under. So as you work with your broker and your underwriter, before you find that there's a Tarzan dock in the lake with slides and swings and everything else, and they didn't know it was there, be upfront with and interactive in communication with them to say, here's what I'm thinking before I buy it. What's it going to cost? What kind of rules do you have? And this goes for everything. I mean, we have an idea of a pyro class. You know, that's a perfect example. That's a risky thing to do and is not standard in camping. And so what did I do before we find out we're doing it in the middle of July? You know, we're talking about it in September 2020 with the idea of launching it in June 2021. And that gives the underwriter trust in the organization and how they're managing risk and safety. And that helps that conversation down the line to say whether they're going to do other things for you or not. So they do hold some of that against close to their vest. There's not a strict no. I have camps that call me and say, we can't get our blob covered at all. And you know, Will and Robert and I know we can get blobs covered almost any day from most of our carriers, as long as they are following certain safety guidelines in construction and operation of a blob. So kind of just depends on who you're talking to, what kind of reputation maybe you have in safety management, and how that works through your broker to the underwriter. There was a question from Rhonda says, does it make sense to get quotes from 2 or 3 brokers to ensure that you're seeing best options, or does working with just one independent, knowledgeable and camp niche mean that you are going to get all options? And like I said before, Rhonda, you're not going to get all options with one broker. What I would also hedge against and say don't do is to take 2 or 3 brokers and say go, because again, there are only, you know, a handful of markets in the niche camping industry. So to put 3 brokers on an open-ended go for it, it's going to be tripping over each other in the marketplace, and it's not a very good way to do it. So just candidly, what I would recommend you do is ask the number one, interview your brokers to find out, have you done camps before? How many camps have you done? How many camps do you insure now, so that you get a pulse of, are they even in camping? Because you may be in a state where there aren't very many camps, so therefore they haven't. And Robert and Will have contracts all across the country, which a lot of specialized camp brokers do. So it's not uncommon to get out of your state to go to a different with an expert broker that has high talent in the camping segment. But ask them, what markets do you have, and what's your expertise, and how many camps you have. And from the conversation today, you heard the list, and you can go to the ACA website and find how many companies are playing in the space of camping. And then you can kind of pick a broker to fit. Say Brotherhood, for instance, is another camp product, and you may have to find just one person to go get that Brotherhood product, but you may find an independent that has all the rest of them. So then you have 2 brokers to get you a fair look at what the entire market can do, come back and then do your comparatives.
Hey, one thing I want to add, and I agree with Rick. So talking about activities, underwriters are really going to be scrutinizing, you know, the new applications that come in. One of the tools they use, they go to your website, they look at your camp's website, they go through the pages. So if they see activities on there, like say the jungle barge that has trampolines on the side of it in the middle of the lake, if it's not disclosed on the applications and they go to the website, all of a sudden now they're wondering, what else did you fail to disclose? So you're not putting yourself in a really good light. So you want to make sure your website and what you're telling your agent you do matches.
And they'll watch videos as well. So if you've got the video of the, you know, 300-pound lineman counselor coming in and blobbing the 2 little kids off the end of, I mean, you know, this is something that they're looking at, and it is going to be a quick no when they come and they see that. So be very, you know, be very smart about what you put online.
This sounds like online dating.
It is creepy. Yes, I agree.
I would also add to what Will said, Evan. It's kind of you kind of outpunch your coverage when you programmatically, you're trying to stand up the most fun program on earth so that you're marketing and attracting families. But what you've done in lieu of that is you've run out of coverage options, because these are standard camp carriers. And if you remember 20 years ago, a camp was maybe a dock in a soccer field. So 20, 30 years ago, camp was a much different definition to insure. And now we have, goodness, we have everything in there. We have amusement, we have high adventure. And what I say in that is don't get so edgy and creative and without contacting your carrier to make sure that what you've created is still insurable, because you may have to begin to alter your definition of camp to make it insurable down the road, and don't get too far outpaced.
So Rick, I think that's a great point, and it's actually a very good segue to my next question, if I may, which is something that I touched on a previous webinar, talking with Andy Pritikin and Steve Baskin, who both ran camp this past summer. And that question was, what did we learn from this past summer that can be carried forward? Has there been any silver lining, if you will? One of the things that they described is that they had to simplify their programs, and they had to do away with a lot of the activities that they had previously offered and marketed aggressively. And what they found was that they ran camp very successfully this last summer without having those programs, which often were expensive programs to run. And as you somewhat indicated, Rick, probably expensive programs to insure. So I guess my question for you gentlemen is, what have we learned that will benefit the camps in terms of the insurance world on a go-forward basis? Because I think we've talked a lot about things that have been challenging and problematic. Are there some happy things that we can take into 2021?
First of all, you can do it. It has been done. It was done this past summer, and the resounding theme from the camps that we spoke with that did operate was that it is possible to do it, and it's actually in some cases they were light summers, but they were one of the best summers that on record. And you just have to be flexible and go into it understanding that, and essentially communicate with your brokers. We can provide some resources and some guidance. Obviously, be in contact with your local health departments. This is all assuming that there's not a fix, which we really don't think there will be a fix by a summer, and that we'll still be faced with some remnants of this pandemic. But it can be done. It was done, and I think that by and large, most camps will operate in some fashion next year. And it may be at reduced capacity. It may be at not as many activities like you mentioned. But parents want to get their kids into camp. There's no doubt about it. And kids want to be in camp. And so I think that we will have a summer camp season next year for sure.
Well, creativity is the double-edged sword, because creativity is exciting. It brings campers in. It creates returnees, and at the same time, the creativity created a lot of things that were cumbersome, burdensome, costly, and once we showed it to campers, we couldn't do away with it. So then we're stuck with it. Well, now we have to continue to offer new. And I think what this summer certainly showed us is by virtue of you don't have enough staff, you don't have enough money, you're going to have to trim and start unloading weight off the boat just to float. And for some and many, I think it was very freeing to say, good, we're going to get rid of the thing that we never could have because we didn't have a good reason. And I think the challenge will be is don't bring it back once you had a good reason to get rid of it. And that's going to obviously be the challenge for everybody. But from an insurability standpoint, we're definitely going to be looking at a much different insurance landscape. Like we started out this conversation, they're retooling sexual abuse coverage. They're retooling property coverage in forms. They're retooling even more of this transmissible communicable disease. So again, we can't be so narrow-minded to think that we'll build it and the insurance companies just need to suck it up and insure it. That's not the way the game gets played. We have to make sure that whatever program we put on the field next summer is insurable, number one. So there's a tight squeeze between insurable and super fun for kids. And we need to find the sweet spot in that.
Yeah.
in terms of training and preparing staff, is that another area that you think is going to be highlighted this year? You know, we don't have the conferences this year. This is another change from the professional standpoint. You know, Robert, when we were talking at the beginning, you mentioned when you were describing Markel, you were mentioning the fact that, you know, they were regulars. You know, you'd see the folks, you know, I remember seeing Ian Garner literally, I mean, basically almost every conference we went to. And not just, he wasn't just there as a typical vendor. I mean, this was a gentleman that was really vested in the camping space as a volunteer. And, you know, I mean, you'd see him everywhere. But you're not going to have access. A lot of people don't have access to you guys at these conferences or to the conversations that are taking place. So I think webinars like this are helpful, but what else can they do to gain information? What do you think people should be doing? And are you offering webinars? Are you having more contact on the phone than you've had in the past? Because are you going out to see more people? Like, how are you going to interact with your clients and prospects over the course of the next 6-7 months?
Well, it's a evolving thing, but yes. So it's forums like this, you know, trying to create awareness of what's going on in the industry. Rick has a camp risk managers conference he does every year. It was well attended. I think he had 60 or 80 attendees. So I usually give them a kind of a state of the union there. CAMP. So I work through several associations, and they'll kind of tee up a webinar, and they'll have, you know, the lobbyist, the insurance guy, you know, whatever the hot subject is. But, you know, as an agent, it's not that much fun sitting in my office. I mean, you can see my office here. It's nice and everything, got window, but it's a lot more fun to go and see a camp. Let me tell you, I don't have to wear a suit. I can dress comfortable. Every camp person is so friendly. I mean, it's like family to me. So I'm looking forward to when I can go see camps again. And so far, I've seen 3 in the last month. So they're starting to allow us back in to talk to them. I'm excited about that. I am kind of interested to see how ACA and 3CA and some of these associations are going to do these virtual conferences, because the exhibit halls, you know, how do you exhibit in a virtual conference? I mean, am I going to have to be live on a Zoom link and just wait for somebody to pop in and talk to them? I don't know how that's going to work. I need to call Kim at ACA and ask her, how does this work? Or do we shoot videos and then they can click on our videos and see, get our elevator pitch? I don't know. So it's going to be an interesting year. I mean, we insure probably 2,000 daycare centers, and we go to probably 15 daycare conventions a year. Those are all going to be virtual next year. So
I think that platforms like Expert Online Training are going to be huge for organizations going forward. And, you know, so EOT does a great job of covering all aspects of camp and different topics. But one of the main topics that insurance carriers are focusing on, and they want very detailed information, is on your abuse and molestation training. Every carrier that I've spoken with over the past couple of months leading into this very busy renewal season, they want to see a written abuse prevention plan. They want to see the plan that your organization has adopted. They want to also dig into the type of training that your organization is offering. And so I'm recommending to most camps that I've come across that if you're not already considering third-party training for some of those activities, you know, leading up to the camp season, where counselors can do it from home or their dorm room and take some of these training modules coming into the camp, and pairing that with the existing orientation period training that they have for abuse and molestation. I mean, they should be doing so. So again, you're not going to be able to provide me with too much information for your renewal when it comes to abuse this year. All the carriers, if they're going to be willing to extend the limits that everyone's accustomed to having, they're going to be dotting all I's and crossing all T's and making sure that each camp is in fact doing what they say they are on the application.
It might be worthwhile for us to consider putting together like a bullet point list of things that camps can do. in an effort to make themselves more attractive to the underwriters. Which it might be helpful if camps are looking at that and sort of making some decisions before they invest in equipment or before they post stuff on their website. This might be a time for people in the camp industry to do a little bit of self-analysis or program analysis going forward, kind of a reset. Rick, do you have any thoughts in terms? Do you also use a blended approach? Are you guys doing some on-site training and some stuff that's video-based as well? What are you doing in terms of training your staff and preparing them and educating them also about not just the sexual abuse, which Will just commented on, but also preparation in terms of COVID and what you want them to do in the weeks before they arrive on site for summer 2021?
Yeah, well, training in this culture has risen really to the primary point. It used to be at a certain point where summer staff coming in, college kids, 18 to 23, had a little bit more knowledge in the sense of how to hook up a trailer, how to use a broom without a Swiffer. I mean, there are just a lot of things nowadays as we bring in kids to go, and now they have to learn more quicker than they've ever had to learn, where it used to be just come in, rake leaves, we're going to teach you and certify you on canoes and boat driving and high elements or whatever. Now we have to extend it out there to say, oh, by the way, here's several hours of sexual abuse awareness training, statistics, reporting. Oh, by the way, here's a lot of other COVID pandemic. I mean, the demand is now outweighing our capacity on site in the month of May, if you will, in camping, to be able to stand everything up, as well as get the mold off the mattresses, the leaves out of the camp and everything else. And so you're exactly right. Training has risen to the forefront, not just from an operational standpoint, but also from a mitigative. How do we mitigate property losses in vehicle driving? Well, now we need to train more on vehicle operating, trailer operating, golf cart operating, whatever it is, also on the abuse. And so it's a property prevention mandate that we train better, but it's also a very extreme liability prevention as it relates to the other liability issues of inappropriateness or just failure to lifeguard correctly or to other things. And so we're using a blend, and most of the clients I work with in the consulting arena have to use a blend, because we can't put all of our eggs in either basket and win the battle. And what I mean by that is, in traditional years where the world doesn't have a pandemic, in camping, camps are largely staffed with the college age group coming out of college. You get out of college the first week of May or whatever, last week of April or whatever. All of a sudden you're transitioning back home, repacking, then coming back in. Camps are struggling to get time for those college kids to actually sit and listen and absorb and show competency before they show up. Now, I think most of the camps may agree with me, and is that sometimes we have problems just getting your I-9 form. So it's like, can you please complete your packet and do all this training? So what we've had to do is really dial in and say, what's doable and reasonable for us to deliver online before you get here from an aptitude standpoint. We're winning some battles, I think, in the abuse online awareness training and some of the other things that don't require necessarily face-to-face hands-on skills, and trying to transfer some of that over to them before they get to camp. But at the same time, then you're still doing it in camp in some way or other, because not everybody did it. So the class is still going when they get to camp. So I think there's a hardship in trying to dial in for us in the camping industry. We stand people up real quick in May, trying to get them trained. They come in 2-3 weeks after they get out of college. All of a sudden, there they go. They've got to be proficient at what we need them to do by the start of camp. And there's so much more to train about. I like the online because of the aptitude, the general aptitude learning. We really want to shift to an LMS system. I think largely when I talk to my clients and they're really wanting to navigate that to find out how can I drive aptitude to online, so that when they get here, now I can do skills assessment and competency evaluation so that I can win the war of time, because we're struggling with that time aspect.
May I ask, gentlemen, would it be all right if I include your contact details in a follow-up email that I send to everyone? Is that it? Hate to put you on the spot. Is that all right?
Absolutely.
Okay, guys. Well, listen, I think we're certainly a little over our hour scheduled time. So I thank you all very much. I don't know is there anything that we didn't cover that you think we should touch upon before we conclude? Good.
Well, there was a lot of talk about Markel, and I would say for you Markel people out there, you are in DEFCON 3. Not that it's all over. There are good transitions, but don't wait. Don't sit back and wait for your broker to reach out to you. Initiate calls sooner than later, and begin to have that dialogue, because it may take time. And you need, like Robert said earlier, don't show up 2 weeks or even 4 weeks out and say, oops. Please try to give yourself 60 days to give your broker adequate time to navigate the markets out there, because if it only does you a disadvantage if you show up late in the game. And so take initiative and jump in ahead of that, and that way it'll give you a little bit more margin.
Right. And as you highlighted, there's a number of great programs still out there that are available to them. And it's not a disastrous situation as of yet. All right. Well, very good. Well, thank you all very, very much. I really appreciate your time. Thanks, guys. Have yourselves a great day, and we'll discuss and probably look into maybe a second part to this in the near future. All right, gents?
Very good.
Thank you.
Good.
Bye,
Thank you.
everybody. Thanks for your time.
Kevin.
My pleasure.
You-